In this video, we will talk about Hyliion, its recent market price movement, what it means for the company, and if you should buy its shares. Recently, the share price of Hyliion increased from around $17 to almost $20 before stabilizing slightly lower. The price increase occurred after a long of stagnation of many months around the support zone between $16 and $17. There are at least two key reasons behind this price action. The first one is the announcement by Hyliion of new battery module. It can be charged at a faster pace, has longer independent range, and can provide better energy savings. In other words, it is a system that can both improve the energy savings of their hybrid systems and potentially increase the capacities of the upcoming semi-truck that Hyliion is currently manufacturing, called ERX. Regardless of the fundamental reasons behind, there will be people selling and people buying the shares of a company at any given time. It is all a question of if there are more buyers than sellers and vice versa. Hyliion has seen its stock price at a relatively low level since late 2020. It is entirely possible that the huge wave of investors who decided to lock in their profit when the share price was peaking around mid-2020 have decided to jump back on the ship because they never wanted to leave in the first place. After all, let's keep in mind that Hyliion is one of the companies that almost had no negative coverage about it during the entire EV frenzy of 2020, and that it has delivered on the products that it was advertising. Of course, there were analysts who were bearish on the company, or news articles about SEC investigation for false advertising. But as far as I can tell, the bearish analysts were commenting mostly on the rapid price increase it had at the time, and speculating about the shares being overbought. And the SEC investigation had no follow-up in the following month. The reasons why this is significant is because for a large portion of the listed companies, their share prices are influenced by not only the fundamentals, but also the collective psyche of what people participating in this game of buying and selling is at one point in time. When Hyliion shares collapsed back in 2020, the fundamental reasons alone were not enough to justify such a significant price decrease. The main reason was the collective decision of traders to lock in their gains. It is possible that this time, perhaps not the main reason, a significant factor behind the current price increase is a collective decision of the market participants to re-enter into the capital of Hyliion. A final remark to this point is that the market can sometimes react in ways that would be incomprehensible based on the fundamental information available. A good example of this would be Hyliion's competitor, Nikola. Nikola has been through a massive amount of bad news in the recent month. Many have predicted that the company may not last beyond 2020 since the company's reputation was in very bad shape. This kind of context should have given Nikola its final strike and brought it to insolvency. However, the stock price of Nikola has managed to remain above a certain price point and has even recovered some of the lost territories. This is a good example of when the stock market has its own mind and imposes its own logic. Back to Hyliion. I believe that this same logic by the market would also be seen in the weeks and months to come. In fact, if we look at the news announcement itself, we should also consider the effect of the financial market on announcements. Hyliion has two product lines, one of hybrid modules to retrofit the trucks, and another one of zero-emission semi-trucks that have yet to come. The announcement of a better battery module actually has a multiplier effect on both products. On one hand, the modules will be more performant and can attract a greater number of potential buyers, which can then increase the cash flows and the amount of reinvestment into the company. On the other hand, the improved performance of the battery can improve the competitiveness of the upcoming ERX. The least that we can say is that Hyliion's recent announcement convinced the market to give it a second push in its share price after the initial craze back in summer of 2020. Now, let's also look at the potential dangers that lie ahead for Hyliion. The first one is the increasing competition in the sector. Analysts have mentioned this multiple times already, so I will make it quick. Over the course of 2020, there have been multiple manufacturers who expressed their interest and plans in manufacturing zero-emission semi-trucks. Along with Hyliion, Tesla, Nikola, and Hyliion also decided to enter the sector. Many of those companies have existing technology, brand power, and more capital than Hyliion, and this may squeeze both the sales volume and profit margin for the startup. A second aspect is more generalized to the entire sector, and this is what I like to call the brick wall of reality. Despite the praise and hype around Hyliion's hybrid modules, the company's own financial statements did not report any significant revenue streams from the sale of these modules. In other words, the product that everyone thinks is wonderful has no significant demand. Keep in mind that the modules have been available for sale for some time now. If it did not generate the cash flows the company initially expected, maybe that says something to the real demand for low and zero emission vehicles in this sector in particular. Keep in mind that this sector relies on numbers and not hope or dreams in order to justify its purchases. Another potential brick wall is the ERX itself. Given the relatively slow and difficult business conditions in many parts of the world, it is possible that ERX may be delayed. If that were the case, the stock price can also take a tumble. Before we move on to my recommendation, if you like my content, please like, comment, and subscribe to my channel for more analysis videos. I believe that Hyliion is a buy. The company proved itself that it has real projects and willingness to develop the products that it advertises, and that so far it has managed to deliver on its promises. The other attractive aspect is the current price point. Hyliion is still in a relatively low price region compared to where the stock has been in the previous month. This means that the stock probably bottomed out as far as the bearish and short sellers are concerned, and that if there is any movement that is upcoming, it should be going upwards. The main catalysts for the stock should be any announcements regarding the performance of its modules and progress on manufacturing the ERX. Keep in mind that Hyliion is still an early stage startup, so the risk should be managed accordingly. I would recommend an exposure between 1 to 3% of your overall portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.